Has the trade war already ended and the equity market rally already happened? Since our last video on April 7th, a lot has happened. At the time, you remember, we tried to stress don't get too negative in the short term. Once such a negative shock as the massive trade increase from 2nd April hits the market, equity markets are very fast to price this in. Once we discuss what to do, usually, at least in the last decades, most of the damage has already happened. Rather a bad time to decrease equity exposure. Fast forward over the last weeks, markets are actually playing a much more optimistic scenario. As we said at the time, this trade war is not something that happens by natural force. One person thought this out, and this person can always change its mind as it sees that the damage to the US economy, the US stock market is massive. And exactly this has happened, very fast even. Markets are playing that the US administration will cut back in the trade war, make concessions, make deals, and equity markets are playing this. In the last weeks, we show a sharp rebound as the outlook and the hopes has improved. Well, as we all know, equity markets are volatile. So, of course, there is a chance that markets rise further. And I would show the same examples we had the last months, but just with a little longer follow-up what has happened then in the year afterwards. As an example, the last two crises. On the one hand, Corona. With the lockdowns, markets go down a lot. The low is reached very fast, and then we see a recovery, and then the recovery continues because the outlook and the hopes have increased and increased. The worst was already priced in shortly after the lockdowns. From then on, it was constantly improving outlook. That's one possibility. Then we would rise more or less further over the next months. But bear in mind, equity markets usually are much more volatile. In the case of Ukraine, in the long term, a similar picture. In the long term, equity markets were higher, 1 year later, 2 years later, etc. But it took markets much longer to bottom out. There were negative surprises on the way. After first sharp recovery, markets came back. In the long term, it was also a good period to invest. But you might have been worried that you pick a rather high level to step in to increase your exposure and you don't make perfect use of the low levels. What do we do in current setting? To be honest, I cannot tell you which scenario will apply. The example of Corona or the example of Ukraine to the current situation. On the long term, we know if you're an investor that is suitable for equity market exposure, if you can stand the volatility and the risk, then at least historically, the highest returns were there. So many people would like to make use of such a situation to increase equity exposure. And to cut it short, there's a quite simple psychological recipe to deal with such a situation. Nobody forces you to invest all your money in the equity market on one day with the risk that 2 weeks later, 3 weeks later, you will be significantly lower. A simple picture if you want to explain this to a friend. In summer, you might think about diving into the water, maybe even from the 10-meter platform, which is pretty high. So you're worried. It's psychologically difficult to do a jump from 10 meters. In the markets, it's easier. To cover 10 meters, to invest 10 meters in the equity market, nobody forces you to do this in one step, which means all in one day. You can jump 5 times from the 2-meter platform. 5 times 2 is also 10 meters. Yeah? So invest 5 times, just 20% of the money over several months. You will not get the best entry level, you will not get the worst, but you will probably get a decently okay investment level to profit them if markets continue rising in the long term as historically they have done. In this respect, all the best to you. Also a nice start of the bathing season, and we keep you posted.